All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and today is Wednesday, November 7th, or Rally Day. Ooh, I don't even have the chart cover. It's uncovered there. So look at that rocket through the 200-day moving average there for the S&P. I always start with the S&P. Just as a quick recap from yesterday, I was saying that, I think a lot of traders were hung up on the overhead resistance, but there was some really nice, really nice looking chart with the Dow yesterday. It was like the Dow looks fine. Dow made it over. I didn't think that that would be a major issue. I think there's bigger things than the 200-day moving average that happen at play here. So I hope that helps a little bit. Honestly, I hope my analysis has kind of helped a little bit. I'll talk a little bit. Let me go over the performance of where we are. So again, just like we're up here, I'm not going to overanalyze this again and say, oh, we're up to this resistance, maybe we fall back here. I just don't think that type of analysis is really constructive. Because again, the reason why that I don't think it's constructive is every day you're going to have names outperform in the the 500 names and all the sectors in the S&P. Some are going to outperform others and some are going to underperform. That's not going to help you. Let's say tomorrow that S&P moves up to the 50-day moving average. Unless you're just playing the S&P, it's not going to tell, like if it's going to be a different story, for example, if you're in Nvidia versus Coca-Cola, right? They're both, I believe they're both in the S&P 500, but or Amazon and Coca-Cola, or Amazon and Macy's, right? Looking at the 50-day moving average in the S&P is not going to make a world of difference for you if you're in a couple of those stocks. You have to analyze the stocks on a one-by-one basis. Because my thought is once the volatility starts to trickle out, which it is, I think we ended up just below 17 on the VIX. Stocks separate. They move on their own. They don't move all together. We haven't seen that. The only time that happens a lot is when the VIX is above 20, and and around 20 to 25. Obviously higher, then that's when correlations move up and all the stocks move together. But we have not had that for a while. We've got every day except for today, which was a full participation day. The only thing that was down, I think, was the gold miners. But on a normal day, you have some sectors that are in the green, some sectors in the red. So it helps to look at the overall picture. But sorry, I'm really hammering this point home. But I just think if you do this analysis in the S&P and in the Qs, unless you're trading the indices and that's all you're trading, then it's not going to help that much. I just think there's too much micro managing or micro analyzing of this kind of stuff. Nasdaq had a huge day today, up 2.9%. Small caps. Just bring up IWM. They were up 1.8%. They're still buried under the 200-day moving average, but they've got the momentum right now. They did not outperform the Qs today, but today's only one day. So in sectors, let me go over this for a minute. Big outperformance in the Mary Jane ETF. This, I think, is very much an election trade, up 7% today. What really got me interested was the move in the software names, and there was a couple software names that reported today, which really helped, or names that are in this group. Data moved up huge today, up 15%, and then Twilio really got the whole group going. And you could kind of dissect the group. I mean, Twilio, unbelievable, right, on volume. So look at the volume that happened here, by the way. Interesting. But very strong, and Twilio likes to move on earnings day. Way above, I think they were implying a 14 or 15% move for Twilio, so real big move. But anyway, this got the group going. Names like Salesforce. So a couple of names report, a lot of names are reporting, obviously, but Hubs reported, which is, a name that, I don't know, a smaller, what do I say, a smaller Salesforce, I guess, Hubs. Also, Pega reported. So again, just oodles of names that are reporting. Pega is up, small cap name. So this group, Microsoft got going today. Again, a lot of these charts are going to start to look the same. A lot of these names that are in the software group, for example. So if you look at, let's say, Microsoft and Adobe, they're similar. They're not exact the same, but real nice move and real nice pop in Microsoft today. I'm embarrassed to say, but I'm okay admitting it. I had mentioned Microsoft in the trading room yesterday. I started a trade yesterday and I took it off. I kind of said I got a little frustrated. I just said this group isn't doing what I want it to do. And I just said, hey, I want to be kind of positioned where the way I want to be positioned, and just haven't been adding a ton of trades. The trades that I've added have worked. I've honestly worked pretty well, knock on wood. But this was my screw up yesterday. I thought the setup was great, but I just didn't have the confidence to kind of hold going into the election. But big day for Microsoft. And then if you look at Adobe, also not a bad looking move today, up 5%. Amazon, which again I haven't been focusing too much on the FANG stocks recently, just a monster move, up 112 bucks, 112 bucks, up 6%. That is such a big market cap move; it is insane for Amazon. But buyers are coming back. So let's talk a little bit about this, and let's talk about whether or not there will be follow through. The last ETF that and again I could spend time in talking about each one of these sectors. IHF had a huge move. The healthcare ETF helped by what Humana reported. And this is monster move. Right above that 50-day moving average, up almost 4%. The whole ETF, the whole group. I think UNH had a nice day. Yeah, I mean, bam, after 52-week high, just like that. So let's talk about a little bit about growth. Growth has been, so I'll tell you what I know, and the ETF fund flows have been giving me one hell of a look inside to see what's going on. So, why do I think ETF fund flows are on my radar? Why do I analyze these? Because first of all, more and more funds are using them. Right? There continues to be a move out of mutual funds and into ETFs, and ETFs are used for every damn thing possible, not just passive management. They're used for active trading. So that's what I used to do back in the day. I was, between me and one other trader, we basically ran a desk at Bank of America for all institutional trading for ETFs. So I know how these funds use them. They're in and out of them every day. They're not passively trading. They're not passively holding. Now, there are some funds that do that, but for the most part, funds trade this stuff left and right. So really what helps is that for the fund flows is you could see, you don't have to wait. Like I know people look at 13Fs and that's basically all in the past. I could look the very next day and see where people are putting their money. And there's no other place that I know of, right? We could look at option flow and we could say, oh, that looked like it was aggressive. And we could look at the open interest the next day and say somebody took a nice, but I know 100%. Or maybe 90% certainty whether somebody is shifting, how people are shifting money around. So this is the IBD 50 growth list. So here's my quick post-mortem. And I talked a lot about this in the webinar that I gave last night. If you didn't get a chance to look at that video, it is there posted on my Twitter feed, which I'm going to reference that again in a second. But we really don't know. I mean, I think what happened in October, and I'm a victim of that too, is everybody was in growth names. Everybody was in growth. And I wasn't even looking at value names. I wasn't looking at the banks. I wasn't looking at consumer staples because I thought that they were just a black hole. So for the most part, for what I was trading a few months ago was mainly growth. Consumer discretionary, obviously tech, software. So everybody was doing this, right? And it's what happens when everybody goes on one side of the boat tips over. And that's basically what happened. And you had a couple we still have, China is not resolved, first of all. So that has to be cleared up. So that's not a problem that has gone away. And the number 2 on my list of worries is interest rates. So interest rates have stopped going for the long, right? Well, there's 2 different types of interest rates, which people don't reference this when they talk about interest rates. There's the long interest rate, which actually finished down on the day today. So, if rates go higher, it's going to be a headwind, and on both sides of the curve, right? So if the Fed wants to continue to act very hawkish, that's a headwind for equities, and it's a headwind for growth. So We get a Fed meeting tomorrow. It's not a there's no Fed rate expected for tomorrow. They expect one for December, but those two things have not gone away. So where does that lead us if we do not have a green light? I think what's happened analyzing those fund flows is there's a lot of money that moved to the sidelines. I don't know the exact reasons. I don't know if it's because of China interest rates or maybe the midterm elections. People were a little bit worried about what was going to change place, and people do this. We've seen this before. We saw this in the election a couple years ago. People take money off the table because they get freaked out, right? So I've referenced before that there was $3.3 billion, and that was just 1 week. That was last week. That was put into short-term Treasury ETFs. Now, usually that money is just a holding spot. It's a holding tank. But there's been a lot of money that has come out of either the longer duration bonds as well as equities. And it's been a huge migration out of growth. And I've seen that happen in a bunch of different ETFs. I could give you the raw numbers too. Tech, for example, saw $2.5 billion of outflows last week. Usually, just to put this in perspective, every week, it's usually tech has been for a while. You go back to the summertime, it was seeing every week, tech was seeing about 600, 500, 600, 700 million of inflows, by far the most sector. So it just ran a clip every week. There was a clip of inflows going into tech. It just got I think, really overcrowded. And when you're faced with issues, that stuff's going to come down quick. So it's definitely has seen a big flush. So that's all my perspective. So where does that leave us? Well, growth is now, it's been kind of chopped. The allocation to growth has been chopped. So, which I think is, leaves a little bit of opportunity, a better opportunity than where we were, with all the growth names up here, in the FFTY ETF, 38, we're down to 32. So maybe that money starts to come back in a little bit. So being that none of us have any crystal balls, and can't tell you exactly what's in it, I'm not going to tell you what I think is going to happen tomorrow, as I've said this from time to time. Like I said, I was going to reference what we talked about in last night's, some of the bullet points from last night's webinar that I gave, is every trade that you manage, you just have to, for me, and I talked about what I need to improve on, is just managing each trade a little bit better. And worrying about, if you're playing in the options game, being mindful of how many positions you have on and the position size. And also monitoring your stops, making sure that you've got alerts set every time that you enter that. Again, this video is for information purposes only, but every time that I enter into a trade, what do? I look to see where the stop is. I set an alert on the downside, right? So I'm happy to share a trade that I put on today, which is really tough to put on a new trade today because the market, everything is moving up. But Expedia, right? I mean, I know where to get out of this. There was some nice January calls that went up today. We saw a lot of moves in, I guess, tourism that have done pretty well. Booking had good earnings. Trip had good earnings tonight. I think Trip is still up. But we also saw the cruise lines, a little bit of option activity in a couple of the cruise lines today. So I like this name. It hasn't really blown out to the upside. You got a W in here. But again, that doesn't mean that it's going, just because the setup looks good, doesn't mean anything. It really doesn't. It manages, so yeah, I like the setup, and if all factors are equal, I think the setup could work. But if they come out and Trump says something like he's putting more tariffs, or if the Fed comes out tomorrow and says that they want to go nuts with raising interest rates, you have to have a plan for one of these things or something other, right? Those are the things on the top of my list that I'm worried about. But what if it's something else? Or what if it's something company specific? So you have to be able to manage this stuff and get out with a small loser, not a big loser. So that goes on your shoulders. It's not, there's nobody that's going to tell you that we're not going to have another pullback. I think it's good that we've already had a good pullback and there's more opportunities. I said, remember what I said on Twitter about, and somebody actually brought up a very good point to me. I said back here that we were crawling. Every rally was getting sold off. We could not hold a rally. And I said, at this point, I'm okay with if we had a 5% pullback. And I know who said it to me, but I don't have permission to say their name. But they said, I agree with you. We do look tired up here, but I don't know if the market will be able to just stop at 5%. And they brought up, I thought about that for a minute. And, sure enough, we got like a 10% pullback. So it was a deeper pullback than I think what most people envisioned. But yeah, we were very tired up here. And, every rally was getting faded. So we were due for a pullback. But moving forward, you can't guarantee when that next thing is going to happen. You have to just monitor your trades. And that's trading and investing, 101. Plenty of books to read about that subject. It has nothing to do with how good of a, when people say like how good of the picks that you're making or setups, it's more about trade management, right? So, let's talk a little bit about this Expedia trade. Because again, I don't like to reference, I see a bunch, I saw some knucklehead today on Twitter talking about how he gave the roadmap. Meanwhile, he's been back and forth on every issue. But today, the roadmap that he gave it's such BS. So let's talk about it. Let's not talk about let's see what happens. Let's talk about a plan. So I went into January options, so giving myself a little bit of time. But at this point, I went into a quarter size position today, and I decided to do. I did outright calls for this. I've been doing a lot of call spreads because volatility is higher, but I chose to go outright calls and pretty much at the money calls, 130 calls for Expedia. So my plan is to basically look to see, because again, this is what you should be going through every time that you enter into a trade. You should know where you want to get out, which for me it's back below the 50. I don't, the top of value is a little bit far away. It's 124. You could also use the 50-day moving average. That's a little bit closer. And then just kind of ratchet up. I would think that this name could possibly get back up to here. So that's 130. So I think taking profits here, a good chunk of the profits up at 130, and then maybe letting the rest of the trade run. And then that's all management. That's all constantly adding a trailing stop, right? So that if it breaks, and again, I'm getting my head ahead of myself because I don't know that it's going to go up here, but then it's adding a trailing stop and letting your winner run, but having those defined areas of where you do want to take some of the trade off. That's the planning. It's that's involved in each trade. The call buying today in Expedia, I could care less. So yeah, a little bit of positioning. It was funny because we talked about this trade in the trading. We were looking at the option activity in CCL, and I started to look at a couple of these names, and I posted the Expedia chart, and then 5 minutes later we saw calls. Great, someone's probably thinking the same thing I am. It doesn't mean the calls is just an idea for me. And the reason why I just take that information and put it into my own system is because I don't know what their portfolio looks like. I have no idea if they're using that as a hedge, if they're speculating. It did look aggressive to me, and they did look like they were bought. But they could also, keep in mind, every time you see calls go up on the tape, institutional traders will also use stock to hedge, just as a retail trader should be doing as well. You should be using stock to hedge your position, delta hedging. And most institutional traders do that. So sometimes they'll leave their calls out there, or they could sell another option against it too. So you just don't know with following option activity. So you got to have your own system. All right, guys. So that's a long video, but good to talk about. It's all about I think strategy and your management of trades and the game plan that you have on and what you're doing. All right, guys. So that's it. Have a great night. See you tomorrow.